Hello, everyone. Today on the Final Bar, we'll do our normal Monday routine. It's my favorite routine where we hit the market from three directions: top-down macro, bottom-up stock picking, sector rotation. This really mirrors my own process of breaking down the market environment from macro to micro. We'll talk about a lot of stocks reporting earnings this week, a number of key names here in the next day or two to focus on, but also the overall environment today with the S&P choppy sideways, small and mid caps up big time. Ladies and gentlemen, this is the Final Bar. Hey, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a rainy Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the market environment using the power of technical analysis, using data visualization techniques to quantify investor behavior. That's what charts tell you, I would argue, is they take all of the individual buy and sell decisions from millions of investors, institutions, and all of that, puts it all together in the chart. And when you look at the price of an asset, an ETF, a stock, or whatever, you are looking into in a roundabout way, or maybe in a broad way, looking into the minds of a lot of investors. And while you're not necessarily seeing what's motivating their buy and sell decisions, you are seeing how they're voting with their capital. There's a lot of information embedded in the price of assets, as more and more academic studies have proven in recent years. So on a day like today, when the S&P is choppy, mid caps and small caps up big time, what does that mean? I think it's less about risk on versus risk off, more about the leadership. When you see what sectors are driving the market higher today, you'll see why the small cap index is up so much, with the S&P 600 up 2.5%. We have great guests on the show. I've had a lot of fun in recent weeks talking with some of these our guests coming through the channel. We have really fantastic, knowledgeable strategists, traders coming through the Final Bar. This week, three great guests for you. On Tuesday, Joe Rabel from Rabel Stock Research. On Wednesday, the 3rd, Christopher Mullen from the Technical Traders. This Thursday, by the way, on the 4th, we have John Kosar from Asbury Research. Next week, look forward to Larry Tantarelli from Blue Chip Daily on Tuesday. And then on Thursday, the 11th, Joe Duarte from Joe Duarte in the moneyoptions.com. A couple other events to let you know about. Arthur Hill, who is a longtime Stock Charts contributor, has done so much to help educate our viewers and our users on how to use technical analysis. We'll be doing a special event this coming Saturday. It's called Trend Following: Theory, Expectations, and Reality. That's at 12 p.m. Eastern, I believe, this coming Friday. So make sure you check it out, and you can see it live on Stock Charts TV. Also, it'll be on our on-demand platform right after broadcast, StockChartsTV.com. Also, please join Julius DeKempener and I at the Money Show Virtual Expo. That's coming up Tuesday, Wednesday, Thursday this week. We will be presenting a session on Wednesday, November 3rd, I think just after noon Eastern, around 12:10 Eastern, called Sector Plays Through Year End. Julius and I spoke a little while last week about a game plan for that presentation. We're going to have a lot of fun. We're going to use RRG as a starting point. We'll talk about sector strength and weakness, how that relates to the seasonally strongest part of the year that starts today on November 1st. And then we'll dig into one particular sector, and we'll look at some themes and some individual names and where we're seeing opportunity. So check that out. It's go to stockcharts.com/moneyshow to sign up for that free event that Julius and I are giving on Wednesday the 3rd. Let's continue on today's show with our market recap. So, this is an interesting day. A lot of days we've seen where the indexes are all sort of moving together. This is actually a little unusual. When you look at the 2-day preview chart on your dashboard, you'll see the S&P moving higher through the course of the day on Friday, really finishing strong in the last half hour of trading on Friday. Today, sort of a W-shaped day, but really means opening higher and then sort of chopping around. And while we close more toward the highs of the day, it really was a sideways day revolving around Friday's close 4605. Really is sort of like the midpoint of the range that we saw today. Now compare that, keep that in your mind, and look at the small cap index, and you can see why that is, I think, a real story today. Small and mid caps really performed strongly through the course of the day, and it wasn't just a spike, it was really an acceleration through the overall day. And again, I think a lot of that speaks to the type of names that were working well today. The two strongest sectors by far, consumer discretionary and energy. those sectors are fairly well represented in the small cap index. And so that is what's allowing that index to do very, very well. If you look at what's underweighted in small and mid caps, it's things like technology. Technology shares are actually flat today. So you have the NASDAQ Composite up 0.6%, the NASDAQ 100 up 0.3% compared to the S&P 600 small cap index up 2.5%. So certainly an interesting time to be paying attention. I think a lot of people just think very simplistically about whether or not you're allocating to equities. And when I've worked with financial advisors, I've often encouraged them to focus on price momentum. There's a lot of opportunity if you could think about where to allocate tactically, but also structurally looking at the big picture. The VIX, by the way, was up today, just back above 16 now. Other asset classes very quickly, interest rates overall finishing higher. The last couple of days have been sort of weird. If you look at $ TNX, sort of opening higher and then closing lower through the course of the day, sort of a choppy feel to the bond markets here Friday and today as well. So overall, yields a little bit higher today with 10-year yields around 157, 158, but not up a ton from where we were at the close on Friday. The TLT down 0.7%, the dollar index down about 1/3%. That's using the UUP. Commodities overall broadly stronger with gold and silver up today. Both USO, the crude oil price that we use, up 0.7%. Energy, as I mentioned, one of the strongest S&P sectors. Energy and consumer names were really up pretty good today. Cryptocurrencies, again, very, very choppy. And when you look at Bitcoin, I think the story has been the break above 60,000, the break to new all-time highs above 65,000. We got up to around 67,000, came right back down to around 60,000 over this weekend. You saw a retest once again of that 60,000 level, and now we're back up trading just above those levels. So, in any chart, it doesn't matter to me what market it is. The technical toolkit talks about, consolidation phases, accumulation phases, and distribution phases, right? What is that overall phase? And you've seen a breakout to new highs. And the question is, do you hold those breakout levels? We'll get to the chart of Bitcoin in a minute, but I do want to start with the chart of the S&P 500. And let's start there. I am, will tell you that overall the trend is very, very strong for stocks. And I will tell you that because leading up to the S&P retesting its all-time highs, my comment as the S&P was down here around 4,300, I was asked, what would it take to turn back bullish on stocks? I'd say we would have to get above the previous highs. We go to new all-time highs. I will have to acknowledge that the trend is positive, and then you would need to follow the trend higher. That is what we have seen in the last 2 weeks, really the last 4 weeks. You've seen this rotation. September was a distribution month. October was an accumulation month. We've seen stocks make higher lows. We've seen stocks make higher highs, and the S&P 500 is pushing onward and ever upward. Now, what's interesting is if we look at the small cap index, and we can look at a couple different things, but look at the IWM, which is the Russell 2000 ETF. Small caps are actually really fascinating. One of the challenges I would argue we've seen when you think about stocks year to date is that while large cap stocks have done very well, I mean, the S&P 500 is probably up, I don't know, I should never try to throw numbers around without looking at chart. I think it's up about 10 to 12%. I think about 10, 11% S&P year to date would be my guess. You compare that to the Russell 2000, the S&P 600, the S&P 400. These are all up maybe 1 to 2% year to date. Not much more than that. I mean, a handful of percent and much less than large caps. Year to date, the story has been large caps over everything else. And if you look at the the Russell 2000 ETF, the end of the last year was here where the ETF was trading just below 200. We moved higher in the first quarter. It felt like small caps were going to lead this charge higher, led by cyclicals. It was energy, financials, industrials, materials, all those sectors doing very, very well. From there, it sort of stabilized, and small caps have been range bound that entire time. Just today with the move higher, the Russell 2000 ETF is testing the upper end of that channel. So if you look at the range, the high from March, the high from June, the high from early July, we're right back there. And so the Russell 2000 ETF has been in a sideways. Small caps have been range bound and are now testing that upper end of the channel. I think one of the key themes between now and year end is small caps starting to outperform again. You need to see the Russell 2000, the S&P 600 break above that range, break out of that range to the upside. That would be the scenario that would allow small caps to outperform large caps. So very, very close. And the ratio of those would be the other thing I would certainly be paying attention to. Gold and silver up today. I want to just look at the chart of the GLD. And again, I'm hesitant to be too excited about the chart of the GLD. And the only reason is because when I look at this and I think about the S&P making new all-time highs, I think about individual stocks breaking out to the upside. I look at interest rates and seeing that breaking to new highs. Gold is sort of not that. It is the opposite of that. It is a chart that has been unable to materialize any sort of uptrend, right? It's been unable to follow through. And I think notable attempts, most recently in September, to eclipse the previous highs and at least make a new swing high and break above a significant resistance level, failed. And not to put too much of a football analogy, but you think of it as a team that's unable to win the big game. They sort of win against the easy opponents, but then you face a legitimate opponent and they're unable to follow through. And that's sort of what gold is. It's sort of that good team, but that's not great. And great wouldn't be the GLD getting above 171, 172. You're unable to quite do that. And the RSI is remaining in a bearish phase, which is more something to be concerned about and less something to be excited about. I mentioned Bitcoin as well. And I think just to take a step back here, think about this in different phases. I think the story, the narrative with Bitcoin is breaking to new all-time highs, but unable to follow through. There was one big move above 64,000, really one day where we closed above it. The immediate next day traded a lot lower. And so you've basically met resistance. We are at that level and are now holding in a holding pattern between 67,000, we'll call it, and 58,000 on the lower end. This is now sort of the new range to pay attention to. I'd be very keen to see if Bitcoin can break to new swing highs or if it fails to new swing lows. If it does, we'll start looking left on the chart and identifying some of those key levels to pay attention to. If it does, though, that's when you have to start thinking about those aggressive long-term upside targets. One of my guests recently was talking about some of those big constructive long-term targets. I think that was Roman Bogomazov, I want to say, using the Wyckoff analysis to project some real long-term. Yeah, it was with the point and figure charts. If you missed that, go to our on-demand platform, StockChartsTV.com. That was actually I wouldn't miss that if you're bullish Bitcoin or if you're bearish Bitcoin. If you're thinking about cryptocurrencies, I would check out his comments. He had a good long-term structural view on the space. We need to move on to our next segment, which is called sector setups. Let's just quickly look at how these sectors actually rotated today, and then we'll look at some of the bigger picture analytics. So today I don't think it was necessarily offense over defense. And, we love to oversimplify. I think in financial media, you're always looking for a narrative to sort of describe the day and pick out some key themes that you can focus on. Today, consumer discretionary up big time. That's totally fair with the XLY up 1.9%. Now, a big component of that is a small name you may not be familiar with called Tesla, up 8% today. It just kept going higher. It closed just above 1,200. And when that name, which is one of the biggest weights in the XLY, continues to push onward and ever upward, that's going to allow the XLY to certainly push on to the upside. Energy number 2 with the XLE up 1.7%. That's an interesting theme because this week you have quite a few energy names that are reporting. FANG, which is Diamondback Energy, is reporting after the close today. Later this week, tomorrow, you have BP, ConocoPhillips, MPC. You also have Devon Energy, DVN is coming up Tuesday after the close. Wednesday, Apache. Thursday, Oxy, OXY. Friday, nothing on Friday. So you have a number of energy names reporting this week. Is my point of that. So certainly be paying attention to that sector. But so far, getting quite a bit going into on Monday, setting the stage for this week. What was not performing well? Financials, technology, healthcare. None of those were really down. It was more just not really up, not really participating on the upside for the equity markets overall. So it was really driven by two sectors: the XOY, the XLE, consumer discretionary, and energy. Let's look at the RRG graph. And again, I mentioned doing an event with Julius DeKemper. It's so fun. I've known Julius for a number of years. We've talked often over at conferences and so forth about his indicators. I'm super excited to work with Julius at StockCharts, and we're going to be giving that event, that presentation for the virtual money show this Wednesday. Go to stockcharts.com/money show for more info on that event. But should be a lot of fun using the RRG and sort of talking about how it frames out the sectors and then digging a little deeper into one particular sector. We're looking at the weekly RRG, which is where I always like to start. It's three sectors that are outliers, that are significantly stronger than everything else. And it's energy, it's consumer discretionary, and it's the financial sector. Energy is a tough one only because, what you have to remember is the further away you are from the 0 point, right? The S&P is sort of at the crosshairs. The further away you are, it's a much more significant volatility or relative movement, right? So this is a sector that's dramatically outperforming over this period. That's when this thing is arcing way, and it's a huge outlier. It's skewing the whole visualization. You'll see the same thing on the daily RRG, by the way. It's a little concerning only because it's super overheated, and that's what it's telling you, right? Is the relative charts are super, super strong, and overall that is encouraging, but it doesn't feel as actionable because it feels like there's so much movement that you've already seen. The XLY is a little more of a reasonable move, sort of heading in the right direction, but in a nice position of strength. Financials are an interesting one. If you look at the last couple of weeks, started to rotate downwards a little bit. And in general, you want things that are in the improving, going into the leading quadrant, heading northeast, right? Heading the direction of improvement is what I tend to call it. So the XLY, the XLE, the two, the most strong. I would say the third would be the XLF. And it's sort of worth looking at this. And again, a number of companies reporting earnings this week there as well. The XLK has been the strongest. And if you look furthest to the right, it has the strongest relative strength using this visualization. The problem is that it's heading in the wrong direction. It's heading southwest, or what you call the direction of deterioration. Even more concerning than that is healthcare, communication services, utilities, all sort of heading southwest. One of the interesting sort of pairs trades here is if you look at the strength in the XLY, the weakness in the XLP. We've talked about that ratio of the XLY over the XLP, certainly favoring the offensive side of consumer, with the consumer discretionary doing so much better than consumer staples. And that certainly appears to be continuing on the daily RRG. You'll see a very similar theme to that as well. When we look at the 11 S&P sectors using the candle glance function, this is the way we can take a look at all of these images together and start to look for similar characteristics. What looks similar, what looks different, what are the outliers, what is showing strength, what's showing weakness. What strikes me right now when you're looking at the 11 S&P sectors, not a lot that's really weak. There are things that are certainly driving the market higher. There are things that don't seem to be participating so much, and communication services is probably the best example of that. We're going to look at that here in a moment, but my takeaway looking at the 11 S&P sectors is overall things are holding up okay. Even things that have been lagging are actually holding up on an absolute basis. Things like materials testing new swing highs from August and September. Technology, which hasn't necessarily been had the most improved award when you look at the RRG, it is making new highs. I'm always interested in looking at outliers, and I think communication services certainly has some area for concern. Now, this is an interesting sector because it's a mishmash of a bunch of different things. You have the old telecoms, things like AT&T and Verizon. You have the media names like Disney, Comcast, and others. You have the big internet names, things like Facebook / Metaverse. You have Alphabet. I don't mean to be disdainful as I'm saying the word, but man, big ticker changes are just brutal to try to get your head around. It's hard enough keeping track of all these stocks without having the tickers change, but FB / MVRS. And also Alphabet and others obviously within there. So it's quite a diverse sector, but at the end of the day, this is netted out to a negative move, right? The relative strength has been pretty weak. And this is one of the few sectors that's actually below its 50-day moving average. We're going to take a quick break. We'll be back continuing our discussion, digging into shifting stocks. We'll be back with you in a minute. Hey everyone, welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. Thanks so much for joining us every weekday after the close as we focus on the charts together, hit on the key themes using technical analysis and behavioral finance techniques. A couple quick comments before we get to our next segment, shifting stocks. First off, we love to get your questions. We're going to do a couple mailbag segments later in this week, once on Wednesday and another on Friday. We would love to answer your question live on the air. Nothing is out of bounds, but we will do our best to point you in the right direction, particularly questions on technical analysis, on particular charts, ETFs, ratios that you're looking at, helping you make sense of the markets. We're happy to do it. Our email is the best way to get a hold of us, thefinalbar@stockcharts.com. Also, we are on Twitter @FinalBarSCTV. We are on YouTube. Go to a video on the Stock Charts channel, put a comment below that video. We'll gather all those questions, hope to answer one of yours in our next mailbag segment on Wednesday's show. Also, go to StockChartsTV.com. That's our on-demand platform. Our content is free To consume and use and share with your friends, you can use your email address and set up a free account at stockchartstv.com. You can also go to the app stores on any of your mobile devices, search for StockCharts TV on demand. Our next segment is called Shifting Stocks. So the third piece of the puzzle as we continue macro to micro is looking at individual names. We talk about the overall performance, the S&P making new all-time highs today, really driven by mid caps and small caps. So you're seeing a rotation into those cap tiers, which is certainly a theme I would be very paying attention to. That's not a great way to say that. I would very much be paying attention to that emerging theme between now and year end, because that would be a different look. It's really been about large caps over other things year to date. If that changes, I think a lot of people could be caught on the wrong side of that if you're not allocated enough to the small cap space. We talked in the sector segment about one of the sectors, communication services, doing poorly. The relative performance of consumer discretionary versus consumer staples tells you people are still on offense overall, but also talked about sort of the overall rotation into things like energy and financials and consumer discretionary. Now let's look at some of the individual names. As I mentioned, a lot of stocks are reporting earnings this week, and I'd certainly encourage you to pay attention to some of those. Well, let's look at some of the individual stocks that we can pay attention to, particularly Tesla. When I'm looking at the market movers, and by the way, I would encourage you on your dashboard, use some of these widgets. This is I spent a lot of time on this chart or on this page on StockCharts.com, particularly this line of objects, looking at the scooter rankings. What are the top ranked stocks? Which stocks are gaining or losing the most in their scooter ranking, which tells you relative performance versus other stocks in their space. Market movers, which stocks are on the move, because this tells you where there may be opportunities, tells you which stocks are fluctuating, and you can dig into the why and the how later, but this tells you what names you should be paying attention to. And also predefined alerts are a great way to sort of get triggers, tells you when there are some changes in the structure of the market, right? What sectors, what indexes are rotating where, and today getting all these signals that the major indexes are hitting new all-time highs, again, is just a reminder of the underlying strength in the markets. As a reminder, to get those objects on your dashboard, go to the little tool, the little gear boxes, and select some of these additional items. Let's look at these two top performers today in the S&P. Number one, we'll go to BEN, B-E-N. This is Franklin Resources. So this is Franklin Investments and Franklin Templeton, based in the New York area. And a huge move today. So they announced an acquisition today, which is causing quite a bit of upside for the stock. What's interesting from a technical perspective, and again, I'd encourage you to dig deeper into the fundamental reasons and the valuation and what that merger or that acquisition actually means for the stock. But from a technical perspective, I think it's really interesting to note that Franklin hit a resistance in May and again in June. I'm going to actually take the adjustments out. So I'm actually looking at the pure price behavior. It's a little cleaner way to look at the price action and look at the supply and demand using the price. So for resistance, we have the high in May, which is around 35. We had another high in June around 36. Those two levels are the two levels we hit today. So we basically filled that range and got back to the upper end of the range. So while this move higher, 11-12% is certainly encouraging, we are now at resistance, which means anyone that has bought Franklin Resources in the last 6 months is now basically at the very least flat, or at best now has a positive return from where they bought back here in weakness. And the question always is there enough momentum, enough buying power to push the stock above resistance? This is why stocks often find resistance at previous resistance levels, because when the stock hits there, especially in this sort of move, anyone that bought here is now showing a profit. This is when there may be some profit taking. And again, we anticipate a little bit of resistance. All of those reasons causes the price more often than not to rotate lower off of that resistance level. And the question now, is there enough buying power to push the price higher? If you do get above 36 and follow through there, a lot of people will see that, especially institutions will see that as a sign of strength, showing that this is not just getting up to resistance, but powering through it. And this is why screening the new highs list is an exercise that I've done for a number of years, because it indicates when a stock like BEN is pushing to new highs, and that's what allows it to get to further upside from there. So certainly worth paying attention to that stock, not just today getting back to the previous resistance, but is it able to power through to the upside? The other one we have to acknowledge is Tesla, and we've talked about Tesla in recent weeks because, while Tesla has certainly been a name, a noteworthy name in terms of its rotation high, or sort of this rounding accumulation pattern with a huge range. I mean, this looks like a very orderly trading looking at the stock, but this is round tripping from 900 down to 550 and back to 900. This is a huge percent swing that you're talking about, both on the downside when it's losing about 40% of its value, and then on the upside when it's gaining 60 some percent to regain those previous highs. Now we sort of have this range. We have the high from January 2021. That's around 900. We have the 1,000 level, the big round number level, which is where we close on that big gap higher. And from there, we've just powered higher and higher. It's up over another 8.5% today, trading at 1,200, another new all-time high. And again, these sort of new highs are not to be feared. I know a lot of times you can feel like you missed out. There are plenty of charts I can show you where buying after a move like this is not too early because it can go a lot higher. An example is Tesla back here when it's breaking to new highs in July, continues to power higher and higher. I can't guarantee that sort of move is going to happen. I just can tell you that overall the trend remains very, very positive, showing strong price, strong relative. The challenge is where's that pullback, that actionable, buyable pullback? You're not seeing it today. You're seeing this as a very much a momentum name as it powers onward and upward. Just a couple of stocks reporting after the close today. We'll highlight a couple of those very quickly. FANG is the first of the energy stocks. And again, energy up pretty good today. And I think it's worth paying attention to this space. You have a lot of energy stocks reporting. This could be the week where you have enough of a catalyst through earnings indicating strength. So FANG overall is making new swing highs, getting above 100, which is encouraging. Also overbought and just recently coming out of that overbought region. So sort of, conflicting technical signals here with new highs, but coming out of the overbought condition. I would look to see where this can close tomorrow. Can it power through new highs driven by the strength in earnings? Mosaic is in the material sector, also reporting after the close today, and holding above 40 would be the short-term support line based on the technical look there. May and June highs would be certainly something to pay attention to as well. Can it hold 38 if there's any sort of pullback? Coming up tomorrow before the open, before we're able to do our next show, 3 stocks to highlight for you. Number 1, GNRC. Stock like this is in a good uptrend. It's making new highs. It's up again today. Can it sustain that as it's making a new 12-month relative high again today? 2 energy stocks to pay attention to. ConocoPhillips, one of the biggest names in the sector, and certainly one to pay attention to in terms of leadership. MPC is one, again, just breaking above resistance. You'll find this on a lot of the energy charts. They set resistance earlier in the year when the sector was doing very well. They've all pulled back and now round tripped back to those previous highs. Many of them have eclipsed them. Can it hold that resistance level, that support level based on the resistance from earlier this year? I key in on some of those levels on those important charts within the energy sector. We need to wrap the show. Go to the 3 and 3 charts, 3 minutes. Here we go. Chart number 1 is looking at global regions year to date. If you start the clock December 30th or 31st, whenever it was the end of last year, and you look at where we're at today, you'll notice emerging markets are essentially flat for the year, down 0.25%. You've gained nothing on an absolute basis owning emerging markets. Developed markets, which is sort of developed Europe and Asia, things like Japan, the UK, France, etc., up 13% year to date. Most of those gains came in the first half of the year. They've been sideways for the second half of the year. The US market using the S&P 500 up 24+%. The biggest one of the year, though, for the major asset or major global regions, frontier markets up almost 29%. Now, what's worth noting is if you look at the FM, that's the ETF we're looking at, you have a big exposure to a lot of frontier markets, sort of emerging markets. Vietnam is about 24% of that ETF, but the biggest story there is the financial sector, which makes up over 50% of the weighting. So it's a dramatically different bet than you have in a lot of places. And in a lot of emerging markets and frontier markets, it's a lot of banks that are publicly listed, but that is a bet that has actually been better than the US year to date. I'm surprised to see that, and many of you may not know that. Chart number 2 is Tesla. When you look at the XLY doing well, again, overall, there are a lot of stocks in the sectors doing just fine. However, the strength in Tesla is one of the biggest names, over $1 trillion market cap. Don't look now, it's already gotten to 1.2 trillion. We just passed $1 trillion not too long ago, and that was the story. We were 20% higher already, and you can see that that Tesla got to 1,000. Now it's powered on to 1,200, extremely overbought, which is something to pay attention to. Finally, when you're talking about candle patterns, Intuit giving a bearish engulfing pattern. That's a big up candle, a big down candle. The second day's range, real body engulfs the first day's range, just coming out of the overbought region. That's a short-term tactical sell signal using the candle charts for Intuit. I'm always interested to see a good alignment of candle patterns and oscillators. Does that follow through the rest of this week? Folks, that's our show for today. Thanks so much for joining us every weekday after the close. for the final bar. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.